Welcome to the Refurbishment Mastery podcast with me, Martin Rapley. If you're a property investor who is worried about paying too much for your next property, concerned that you don't know how to manage a refurb, or scared that you will be ripped off by a builder, then this is for you. In this podcast, I share over 30 years of experience of managing refurbishments and conversions to help you make more profit, save your time, and ultimately enjoy the process. On with the podcast. Hi there, and welcome back to the podcast. I'm really pleased to say that in this episode, I've got a special guest to introduce you to. This is Suzi Carter, who's joining me. I've known Suzi now, probably 8 years or something like that. Suzi came into the Property Investors Network community that I was in at the time as an expert in commercial property. This is at a time where everyone's investing in residential property, and suddenly there's someone bringing a different angle to the discussions. And many of you have probably seen and heard Suzi speaking. She's been around the property investing circuit for a long, long time. She's now got her own community of property investors and developers that are more specialising in commercial property. And I have to say, I've dipped in and out of commercial property a few times. As a refurbisher, I get more excited about converting it, of course, rather than holding it. But Suzi's going to talk about holding commercial property, but still with the context that as you are likely to have to do some work from a refurbishment, from a conversion perspective. So we'll dip on all of that. Suzi's going to explain a little bit more about her background, and then we'll have a bit of a chat and see what we can gain for you. So over to you, Suzi. Thanks very much.
Hi, Martin. Hi, everyone. Great to be here. So commercial property. So the beauty of commercial, I think, is that you can do these paper-based exercises where, it's valued on a different way than residential. So you don't necessarily have to, residential, you go in, you make it look pretty, you refurbish, you might extend it, and then you get a valuation on a bricks and mortar basis. With commercial, the way it's valued is a multiplier of the rent. So what's really important is the lease, the rent, and the tenant. And, commercial finance will be based on that as well. Now, so the great thing about that is that you can change the lease, you can get a vacant property let, you can, extend the lease, change the tenant, and all of that will have an impact on your valuation. So it's just a very, very different way of looking at property. And, the other great thing about commercial is there's all these lovely niches that you can invest in, because if you think about commercial property of anything that's occupied by a business, then you can think about how many different types of commercial property. I mean, as commercial surveyors, we're very simple creatures. We like to group it into retail, industrial, offices, leisure, healthcare, but the reality is within those kind of classes and outside of them, there's so many different types of business units. So but as we've just been talking about, Martin, off air, there's very often strategies where you will need to do something to the unit, and it very often isn't anywhere near as much as you might need to do to a residential property. But equally, you need to know the things to do, but just as importantly, the things not to do when you're kind of refurbishing or subdividing units, because tenants will go in and do their own fit out. So just an example, because I know you've got some lovely examples of this from your kind of your track record. But a lovely strategy at the moment, and one that the banks really like lending on, is multi-let units. So banks really like it because they're being de-risked, because you're not just depending on one tenant's success to pay the mortgage. Basically, you're depending on multiple tenants, and quite often, maybe if you've got 4 or 5 tenants, maybe only 1 or 2 of them is paying the mortgage, and then the rest is kind of profit. So it kind of de-risks it from a bank's point of view, but also from a commercial property is all about supply and demand, and really the most successful commercial developments, or investments rather, are those where there's greater tenant demand, and obviously that's what you want to do. And then if you've got some market knowledge, and you get that from your own investing. You can get it from people like me. You can get it from commercial agents. You can get it from, some of the portals you look at. But, if you can find units where there's maybe not much demand for them because they're too big, but you can actually divide the units up. I've got myself and my clients are doing that strategy with industrial, for example, and in some cases doubling rents by just creating smaller units. And of course, you're just putting a breeze block wall in, a bit of subdivision of services, a breeze block wall. Same goes for, a retail unit. It might not be very attractive because it's not got the right shop front on it, or it doesn't look attractive to receive a tenant's fit out. But if you white box it, which I'm sure you'll explain in a minute, then a tenant will look at it and go, oh, I don't need to do a great deal of work to that property. I can just go in and put my fit out in. So the beauty of commercial is you don't have to do a lot of work to it, but there's strategic items that you potentially want to do, or strategies you may want to pursue, that will actually get you massive added value and enable you to get money out, or I've got some clients that are getting all money out of deals with strategies like that.
Not nice. That's not nice to hear. And what I say to anyone, any client I'm working with, is you've got to know your end market. There's no point in just going off and saying, "Oh no, there's a redundant industrial unit down on the estate there. I'll buy that and see what happens." We really need to know what is the market for, what is the demand for those, and then you're effectively creating those subdivided units at dimensions that are suitable for the potential tenant that's looking for units. So this is no different from what I would say to anyone from a residential perspective. You've got to know who's going to take this unit at the end of the day. But as Suzi's saying, there's potentially a lot less work needed because, of course, some businesses don't even need those breeze blocks walls painted. If they're running an industrial type business, they don't need it finished with plaster and wallpaper and all of that. They need some functional walls. So what you'll find is that you could rent a commercial unit out, and the incoming tenant doesn't do anything apart from bringing their material or their equipment for their business. And so that's why, as Suzi touched on, white boxing is so important. It's so important not to over deliver on the commercial market, and really understand the client. Really interesting that you're almost talking here about HMOs of commercial buildings. We talk about HMOs and let's turn a house into 6-7 bedroom HMO. And you're effectively saying, well, let's get a big office building or a bigger office building and create 6-7 smaller units out of those. What kind of tenants are you seeing are really looking for these units at the moment?
It depends on obviously what sector you're looking at, but let's take offices. Offices is a great opportunity at the moment because secondary offices are really falling in price. We're in a downturn in the commercial market, and agents are, as always, kind of talking the market up. But we're still very much in a window of opportunity where prices are low. But I think most sectors, other than secondary offices, are starting to stabilize, whereas secondary offices are still falling in price.
Mm.
So not only, and that's just obviously because of changes in workplace pattern, because businesses, blue chip businesses are going to grade A offices with, highly spec'd, great renewable credentials, etc. And then you've got all these vast swathes of empty offices that, I mean, this has been going on, as you know, Martin, since 2010, 2011 with Class O conversions. There was a reason the government introduced that. So you've got this kind of sweet spot for offices where you've got lower prices and still falling. And then you've got, we call them CMOs, like, kind of HMO, CMO, commercial and multiple occupation. It's not an official title, by the way. That's just something that a few of us call it. But yeah, basically, as you said, be demand led. So understand where the sweet spot is in demand. There's no point creating, 6 500 square foot units if the demand's for 250 or 1,000. So you need to be sensible, and quite often a mix of sizes is good. But there's a huge range of uses that we'll use it in, particularly in offices. You've got kind of small businesses that want office space, but it's so much wider than that. You've got beauty therapists, you know, in some office buildings, you've got like four people administering Botox. Who knew you needed so much Botox? And You've got kind of chiropractors, physios, massage therapists. You've got people using it for storage. In some places you've got dentists so it's such a vast range of uses. But the things you need to just check before you kind of do these works are, first of all, demand and also supply. So what we're seeing certainly in lots of southeast towns, not so much everywhere else in the country, apart from pockets, is that when these offices come up, quite often they're being converted to residential. And so what that means is that actually there's been a shortage of offices in some locations. So whether you do the kind of CMO, commercial and multiple occupation type model, or whether you actually go all in and operate a serviced office yourself, if there's not much supply and there's lots of demand, then obviously you kind of try and cater for that. That's where you're going to find the sweet spot. You just need to be cognizant of the fact that if you don't want an operational business, then probably serviced offices isn't the one to go
Yeah.
into. Like these commercial and multiple occupation, you can have a mix of tenants on 2 to 5 year leases, and you're much more hands off. Yes, there's some common parts, but you can get a managing agent to service those for you. One of my board clients has just bought a kind of £750,000 property, which is mixed use, and it's a mix of industrial and offices, which is a really interesting mix. It's kind of badged as a business centre. And again, one of the beauties of this strategy is that everybody, because it hasn't been particularly well managed by the previous owner, everybody's on kind of rolling licenses and it's all a bit of a mess. And so she's going in there and she's basically formalizing all the leases, putting them between 3 and 5 years, making sure so the tenants like it because they've got security and they know that they're not going to be booted out or whatever, using the technical term. From her point of view, because she's bought it on the basis of all these rolling licenses, there's probably a couple of £100,000 value uplift off the back end when she's formalized
Nice.
all of this. And again, she's gone in and, I know we're talking about kind of refurbing and building works here, but she's going in and there's some fire doors and fire risk elements that she's got to change. She got money off the deal for that. There's some refurb, the roof needs to be done. She got money off the deal for that. She's going to just make it look a bit more attractive, but fundamentally, she doesn't actually need to do a great deal to it. The main exercise she's doing is this paper exercise, improving the leases. But as you know, Martin, with commercial, the trick is knowing when to stop with your works because she could go in there. I mean, I've literally had to hold her back a little bit
Yeah,
because
I bet.
she's got in there and she's like, oh, I can do this and do this, and I'm like, well, why don't you do it in stages and just assess whether it's necessary first because you don't necessarily have to do it.
Yeah.
Yes, making a unit look attractive can attract tenants, but equally quite often if the demand's good enough, tenants will take it anyway. So the trick is almost like, unlike resi, it's kind of like, oh, how far do I go? It's like, actually, how far don't I go? And how can I curb myself on that kind of thing?
Yeah, I think the thing with commercial buildings, and this is not dissimilar from the bigger HMOs, is very much understanding what elements actually add value. So, if, for instance, that you've got functioning toilets in an office building, then refurbishing the toilets probably isn't going to add any value, assuming they work at the moment. So that might not be something to spend money on. And as we've talked about, because a lot of commercial tenants do expect to do an element of fitting out and spend a little bit of money on perhaps some colours, some branding. They want the correct floor finish for their building, for their use. Yeah, an office would want carpet tiles. But if you've got more of a clinic, you might want more of a vinyl, something that's easy to clean. So you wouldn't put any of these things into the unit in the first place. So it could be left very much as a shell. I'm going to tell the story because Suzi mentioned this just before we came online, about a commercial property where I got involved good number of years ago now to convert. There was a commercial property. It had space upstairs to convert and extend into 3 flats. And we did the 3 flats upstairs. My client was left with a commercial building downstairs, which had been somewhat disturbed by putting a new staircase in. The builders had been using it as their site set up. We'd had to put some drainage in, so the floor had been dug up. There was a column in a funny place to hold up everything upstairs. It was a little bit of a higgledy-piggledy thing. My client said to me, repair all the brickwork, get it all plastered up, and then I can let it. And I said, I don't think you want to do this. I said, I think you want to leave it as it is and start marketing it and see who comes along. Well, I at the end, by that point, my project was at an end, my management was at an end. I didn't need to get involved until I met up with this guy a while later on. He said, "Oh, come round and see it. It's all finished. There's a tenant downstairs." And I walked into a barber shop who'd retained all of the existing higgledy-piggledy brickwork as a feature in his shop, these styles of shop. And it was like, oh my word, how much money have I saved you by not allowing you to plaster that wall up? And there was, yes, he'd repaired the floor and done a few other bits and pieces like that. But the key thing here is sometimes, as less is absolutely more. And even if you think your tenant wants more, better to negotiate at that point. You could offer more at that point and say, well, if I plaster the walls, will you sign the lease? Then you can negotiate those things there. But there are so many different types of commercial tenants. And when my client first started looking to rent that building out, he had no idea who was going to rent it. Because oddly enough, there was already a barber shop next door. So anyone would have said, well, there's no demand for a second barber shop here. But actually there was. And the one that's in my client's building is very, very modern, very different style in comparison with the old one next door. And so someone saw a niche, someone saw a market. That's the story about don't do too much. And we talk about this thing, white boxing, which is very much, how do we keep something as a white box? Simply as that. How do we make it something that is usable? So the kinds of things that you want to be thinking about putting into commercial buildings would be, plumbing for a toilet and waste. You want to know that it's got its own electric connection so that the tenant can do the connection. But all you need to do, and all I've done sometimes, is have one double plug socket with a plug-in light. You don't even need to put lights up. You need to consider that it's got means of escape. So you might need to be putting in a fire exit door or something like that. You probably don't even need to change the shop front. Some tenants will put their own shop fronts in if it's not quite the right style for their business. They'll put their shop fronts in. Let's jumping in to make sure that you have everything you need. Now, in a number of these podcasts, you would have heard me talk about my community, and I want to ensure that you know how you can join that community. Obviously, within these podcasts, there's a limit to the detail I can go into the recording, and of course, a lot of things are very generic. So what if you had access to join me on a Zoom call for 90 minutes every single week in a group coaching environment? You could get your questions answered whenever they come up and learn from other members' questions. Plus, you also get 10 hours of training videos, an HMO refurbishment case study, some sample documents and checklists that will help you run your projects far more effectively. Membership of my community is just £89 a month. You get the first month free, and you can also cancel anytime after that. Plus, as a listener of this podcast, there's a promo code to help you save £20 every single month that you remain a member. So just make a note of VIP discount 20, VIP discount 20, all in capital letters, and put that into the checkout. You'll find the checkout on my website, www.refurbishmentmastery.com. Scroll down the page, you'll find the link for the Project Management Accelerator. Use the promo code VIP discount 20 and you'll be signed up at just £69 a month. We look forward to seeing you in that community very, very soon. Now back to the podcast. Suzi, perhaps you can just talk to us how tenants kind of negotiate terms when that you're not quite delivering what they want when they come along.
Yeah, sure. So sometimes, I mean, it is, as you say, you absolutely need to understand what they want. And if you're very clear that actually, it's piled with rubble and you need to clear it out and give it a lick of white paint. One of my clients has literally got all money out deal within 6 months on a retail with uppers, and he spent £3,000 on a lick of white paint because the unit wasn't looking particularly great. So and actually it let within, I mean, that unit had been on the market for 9 months and it let within 6 weeks. So, not a great deal of cash. But yeah, once you're negotiating, it's whether the landlord or the tenant does the works as well. And very often commercial, this is dealt with in rent-free periods. So it's very common in commercial when you offer commercial terms to a tenant that you might offer them, it depends on the size of the unit, obviously, but somewhere between 1 and 4 months rent-free. And valuers won't deduct that from, because you're basically valued on the net rent. And the beauty of commercial, of course, is you have these leases where there's very little taken off because a lot of them are full repairing, insuring leases. So you're not taking maintenance or voids off or anything, unlike a lot of like HMOs and residential. So a valuer won't deduct this rent free because it's just standard in the market. It's standard because tenants will go in there and they will put their shop fit in, or they'll put their corporate branding in, or depending on what type of unit it is. And if a tenant's asking for 4 months and you know that it's probably going to take 2 weeks for them to do a bit of a paint job on it and put a new flooring down, then obviously you'll negotiate that back. Because what you need to be careful of is you're not offering them an incentive to take the lease, because a valuer will take that off the gross rent. But a nice example is that clients of mine have bought a former bank and banks are a really nice opportunity at the moment because a lot of banks are being offloaded, and they own a lot of their own freeholds as well, so they're quite keen to offload them, and you'll see those on with the big commercial agents nationwide. They're kind of marketing nationwide, and they had 3 offers on this particular unit. It's vacant, and they always knew there was something they needed to do to it. They knew the roof was a little bit, needed a few tiles replacing. It's a listed building, so they knew that some of the windows would need refurbishing rather than replacing. But again, they didn't do anything because they were just waiting to see who would take it. And just as well, and they were thinking, oh well, it could be a cafe, and they got a courtyard and we could put some double doors in, and it was like, no, let's just wait and see who comes. And it was interesting because they got 3 offers, all from similar type units, one being a tap room, one being a restaurant, one being a cafe. So similar-ish, but they all had very different requirements. And what was interesting was that, the first tenant they had said, oh, we need you to put a kitchen in. And suddenly you're looking at, £100,000 plus for all the refurbishment, and the numbers just didn't work. That just wasn't gonna. Oh, we need a downstairs loo, and the loo needs to go in the old safe of the bank, and we need this taken out, and kind of like, right, next, let's find somebody else. The other 2 were much more reasonable, and actually, but one thing they did say, both of them, was, well, we're not going to take a full repairing insuring lease because we can already see that the roof needs some work doing to it, that the windows need refurbishing. And so, my advice to my clients, which they've taken, is, okay, we'll get a quote on that. Say to them that you will do those works. You'll need listed building consent, obviously, because it's a listed building. You will go in and do those works, and then they will give you a 10-year full repairing insuring lease. And a 10-year full repairing insuring lease is worth a lot more than the 40 grand or whatever they're going to pay on a bit of a tart up of the windows and the roof. And then the tenant's going to do their own fit out in the unit. So I guess kind of the moral of that particular kind of case study is, one, just don't rush in and assume what the market wants. And number 2, like, if you do need to do something to get a better lease, because that's going to reflected in your valuation, then obviously that's worth doing. Don't just, because it would have been easy for them to say, oh, okay, well, that's fine. You take an internally repairing lease, and then we'll kind of retain liability.
Mm.
That's an ongoing liability for the landlord, which you just don't need to do. So yeah, you just need to really pick and choose kind of how you do this stuff.
Yeah, and this is the big difference with commercial from residential is you can be pretty much hands free yeah, with the management. In which case, if that's your angle, you definitely don't want to be responsible for a potential roof leak in a listed building, which is always more of a lottery to be working with. And of course, some of these listed buildings, and we can talk about commercial to residential conversions, but some of these listed buildings really don't convert into residential buildings. They're too expensive to convert, or the layouts just do not lend themselves. There's so many commercial buildings where the footprint is so big that there's just a massive area in the middle with no natural lighting.
Exactly.
And I know some people will talk about putting in light wells and things like that, but that can get really expensive and often doesn't really add any value. So there are buildings out there that, whilst the estate agent will say can be converted into luxury apartments, what you'll see is for next to no money at all, take the bank there that Suzi's talking about, you could have a tenant in there, and you haven't got all of the stress and hassle. Much as I like it, the stress and hassle of a refurbishment, I'm also the first to say it might not be right. And some of these listed buildings, really are expensive to convert, and you're going to struggle to make money out of it. Whereas they work so well as a coffee shop, or a restaurant, or whatever. So
Yeah.
and this is about understanding the commercial market. And the same as I'd say with anyone about residential property is, do not get blinkered about what you would do with it. It's not your building as far as the use of it. Yes, to you it might make a nice coffee shop, but if there's the people that are running coffee shops, I hope, know more about the market of coffee shops than we do, and someone else will have that other little angle come along. And it's often surprised me, the tenants that have taken commercial units, and it's like, my word, I never expected that to go in there. That didn't look like, I'm picturing a traditional retail shop near me that had glass windows on two sides, and they converted it into a pub. And it was like, that just doesn't feel like a pub. It feels, but it worked. It absolutely worked. So yeah, don't get yourself, don't get blinkered on on those kinds of things. The other thing I just wanted to also mention, because you were talking about commercial buildings where you can sublet them to different tenants with different businesses. Of course, that's the massive advantage now that they've relaxed all of the most of the business use classes, that you can have these multi-use buildings. In the past, it had to be an office. In theory, it even had to be financial based offices needed different planning, or it had to be a nail bar, or it had to be a doctor's surgery. Now we can merge most of these together. That's what's opened up these opportunities for different kind of businesses, and to kind of think about the businesses that might even work well together. You might naturally find that you can create a unit that's more more service based. As office services, perhaps you've got a printer and you've got a copywriter and you've got other people that bring business services together. But perhaps you can also find people that are more creative, and those businesses come together. And I know I was talking to someone, one of your community, and it could be the same person, who was looking at something that was already had a lot of creative type clients in there, and you could make you can make something from that. As far as commercial to residential developments go, it'll be interesting to get your thoughts. As do you think this is something that is still high on everyone's radar, or do you think less people are doing commercial to residential now? Do you think the market's moved a little bit there?
Yeah, it's an interesting one because I have a lot of clients that come to me with opportunities or things they've bought, properties they've bought where they fully intend to convert it to residential. And, we're seeing what happens in the cycle of permitted development rights, as you know, Martin, is that you kind of there's a change or there's a rumored change, and then it's basically the first adopters that kind of get the benefit there because that PD right isn't necessarily priced in to the price. So you buy it at the right price. You can then potentially do a profitable conversion, although build costs obviously are pretty high at the moment. What was just seeing now, especially in the southeast, but in anywhere really where it works, is that it's being priced in. It's being priced into deals, and so you really have to eke out through finding motivated vendors, direct to vendor campaigns, potentially off market deals, some of the really great opportunities where it isn't priced in. Or whether they're so motivated that actually they kind of just want to get the property away to cover their mortgage or their debt or whatever. So yeah, I think first thing to say is, just be careful because these things are priced in. And I think, something that I know you've helped a lot of my clients with, Martin, is pricing some of these jobs. Martin is my go-to expert. So when I have a client that comes to me and says, oh, I have this opportunity, and my spidey senses start tingling, and I go, okay, after 30 years in the business, I'm pretty sure that's not going to work, but you need to go off and talk to Martin. And when they do, they're like, oh yeah, it doesn't work. So but Martin can put the numbers on to confirm that. Um I can do back of a fag packets and kind of, just work it out. But yeah, I think yeah, I've had a lot of clients that come to me, and the very first thing I say to them is like, well, how would it work as commercial? Let's look at it as commercial. So an example is had a client that came to me and had it was a national fast food brand, and there was two upper floors. They had a full repairing insuring lease over the whole property, and they were coming up to a lease renewal, and she fully intended to consolidate the brand into the ground floor and the basement and convert the uppers. And then when we actually looked at it, and yes, it would have a rent reduction because rents dropped a bit during COVID. But when it came down to it, that national brand were willing to take a 5-year lease. And over 5 years, it actually worked better than if she was going to do a conversion. And of course, that conversion is always there to do. Like, it doesn't mean that, and one thing I always advocate with commercial is multiple exits. So always make sure that you've got, can I let it as is? Can I let it as commercial split up into 1 or 2 units? Can I bring in different uses in, as you say, like this Class E use has made it easier, or whatever that it is. And it's great to have a multiple exit where it's like, yes, I can convert it, but you don't have to necessarily do it now. Now, there are some amazing opportunities where it will still work, I think. I mean, Martin, you're working with clients of mine on a conversion of a former bookshop with uppers to a 7-bed HMO, and they've been really smart with it because they sourced it off market. They did an exchange delay completion deal on it, and it's an Article 4 area, but commercial to HMO in an Article 4 area is much easier than residential to HMO in an Article 4 area because you're not taking away existing homeowners type residential. So and that was absolutely, they're going to retain an element of commercial downstairs, but the rest of it's going to be an HMO, and that was absolutely the right thing to do with that particular property, wasn't it? They had their costs sorted, they went through the process, and more importantly, they had you sitting alongside them working through the numbers, so they knew exactly what to do. You were pointed in the right direction in terms of everything. And so there's definitely opportunities out there, but just be really careful that you don't overpay, and just be really careful that you absolutely know your build costs. And Martin, I know one of your kind of your part of your sage advice to certainly to my clients and to your own is don't just put a rate per square foot on conversions. That is so dangerous. Make sure you itemized each item because you can really come a cropper, can't you?
Yeah, absolutely. And I think the thing we've got to watch is estate agents' job is to sell a property for their client. They will, to some extent, tell us whatever they think we need to get us excited to buy that property. They'll tell you it'll convert to residential, but they've done no process to understand the logistics or the costings of that. They'll tell you that there's a great tenant ready to move into this. You've got to do your own research and due diligence there to make sure that that is the case, because yeah, they're not working for us. And actually, some properties I looked at for myself only a few weeks ago were shops with uppers where it was obvious the shops in the longer term probably will all be converted. One or two have been converted to residential downstairs. And our thoughts were, we'll take them as a shop with uppers. They come with tenants. We can refurbish the uppers. We'll hold the downstairs as shops, but it's obvious it can be converted in due course. It doesn't have to be converted now. We're not evicting the tenants now, but in due course, it would work. It's in a residential area where shops really aren't needed anymore. Actually where this was down in Folkestone. There's actually a retail park 2-minute walk round the corner. So the local shops are not needed and are failing now, but they're working to some extent at the moment. So look for the longer term is the other thing. You've got this opportunity with commercial, and in some respects, your planning is easier because if it's already commercial, you can carry on using it as commercial. If you want to convert it to residential, you've got a planning process to go through with all of the hoops and challenges that you can get with all of that. So we've just sown some seeds today, guys, of commercial investing. We haven't gone into it in any massive depth. Ultimately, if you want to go into it in more depth, then Suzi is the person I'd recommend you speak to. And if you end up signing up for Suzi's board, I'll probably see you at one of her board meetings because I come along and deliver some content to her board members. So, Suzi, let us know how people can get hold of you, please.
Yeah, sure. So the details will be in the notes, but it's www.suzicarter.com is my website, and that's gives everything about me. It kind of details my training and everything, so you can find everything there.
And I have to say, I don't really know of anyone else that's offering training in the same way as Suzi is, with the ongoing support, and also someone like Suzi who's out and about at the networking meetings and sharing her knowledge on a regular basis. So, it's always great to catch up with Suzi. In fact, we've kind of run out of time now because we were chatting for so long before we started the recording. So it's always really good to talk to you, Suzi. Thanks very much for joining us. To everyone else who's listening, thank you for joining us as well. Follow Suzi up. I'll put put all the details into the show notes. Just leaves me to say thanks very much for joining me today, Suzi.
Thanks for having me, Martin.
Brilliant.
Thanks for listening to this podcast. Please do like, share, and leave a comment where you can. If you need any guidance or advice with anything to do with your refurbishments or conversions, then don't hesitate to reach out. You can book a free call with me by clicking on the link at the top of my website, refurbishmentmastery.com. There's other ways you can contact me in the show notes as well. I look forward to speaking to you again soon.